Hey everybody, Jim Malone here. It is Dallas Trading Floor. It's Thursday, and the market has moved from a correction to a market in confirmed uptrend. So this is a good news. It looks like we're getting the bounce finally. We think we may have found the bottom yesterday. I'm hoping we did. That is what that's what the charts are saying. And so who knows what's going to happen, but we are back into confirmed uptrend. So now it's time to start looking to possibly put some positions on and move up, move into some good stocks. Just kind of wanted to go through the slides here first before we do the questions. Yeah, I mean, it's great. I mean, I was surprised. I thought we might go a little bit lower, but we do seem to be moving off that 50-day line for the composite. So very good sign here. I mean, we are definitely in a confirmed uptrend. When this slide was taken earlier this morning, we were up to 11,295.71. So that's pretty good. We're up about 1%. We're definitely over that line. That's the 50-day line on the composite. That's the NASDAQ composite. All the stocks in the composite. It's different than the QQQ in that the QQQ is just the top 100. So this is the NASDAQ composite. So that's kind of looking very, very good. We also have some good action on the Dow Jones, which is excellent. So that's looking good too, and the S&P 500. So the only concern is, our volume. It's up a little bit, but I would like to see a little bit more conviction. But at least on the NASDAQ volume, the New York Stock Exchange volume, very, very good today. So hopefully we are moving out of this correction. That's what the hope is. Here is the SPDR. This is the world's largest ETF, by the way. And as you can see, it's just pulled above this red line. This is the 50-day average with some nice volume. Now, the volume was a little bit higher yesterday, but we're still in up volume today. So it kind of, it's testing it, but it looks like we may move higher. So as you can see, we had this correction from this high here, which is about 10,800. This low here is about 10,800, excuse me, and we're coming up from that. So I think we're moving out of the correction above the 50-day moving average. So that's very bullish. We're up 1.88 or 0.6%. So that's looking good on the SPDR. And again, the SPDR is the world's largest ETF, and many, many people have their entire net worth in this. So this is a very important metric, and it looks like it's moving higher. So that's a good thing. Now the QQQ, this is where I'm focused. Most of my buys are in the growth stock area. And of course, this is represented the best by the QQQ, which is basically just the 100 largest capitalization stocks in the NASDAQ. The NASDAQ has thousands of stocks, but the top 100 is what we really want to concern ourselves with. And this is represented by the ETF, the QQQ Trust. And it is definitely moved nicely above the 50-day line. So it looks like we've tested the bottom. Now the question is, will we get a retest on that? I don't think so. I do think in the election we're probably likely to move higher. So the QQQ is 281. The critical level on the Qs, in my way of thinking, was 275. If we had gone lower than that, then we probably would have been in a situation where we might have continued down to that 200-day moving average. But fortunately, that didn't happen. It looks like we've moved up about 1.4% when this slide was taken. So very good. Just wanted to talk to you a little bit about the stock of the day that I have on. And that is a company called FSLY. This is an interesting internet play here. It's in the internet application space. Very, very good numbers on this. Now, of course, it still is not. It still is not profitable. You say, well, why would a stock that's not profitable? Why would people want to buy that? Well, the stock market's very interesting because it is a forward-looking indicator. We are looking at the potential, not necessarily the reality. So that's why sometimes stocks like ExxonMobil can have a great dividend and still have a bad chart and be low price, with a high dividend, and then stocks with a great chart and no profit like FSLY could look good. So that's kind of the way it is. But this is sort of a high tide flag. This is an IPO This has a very typical IPO base. Started out, went lower, and then it just started to be discovered by the funds. And then it sort of cupped like this. This is a very, very typical IPO base. And then it started just recently to start in June. It started to move up above this buy point, and then it's moved solidly up, and now it's consolidating. It's this up down, this railroad tracks kind of thing. That's what we're looking for, because that is a flag. And typically, once everybody's duked it out here, the buyers and the sellers, the strong hands and the weak hands, it's very likely that this will move up. And indeed, it has today. Earlier today, it was up $7 a share, which is very significant, because this is under $100. So about 7% a day is a lot when it comes to things like this. Just wanted to show you my current holdings. I'm in Oracle. I'm also in Taiwan Semi, and Tesla. Tesla's been doing very nicely now. Now, for full disclosure, I have sold a 440 call, so it looks like I probably will be called out on Tesla on Friday. That's tomorrow. So who knows? It's up very nicely, 4%. It seems like it's regaining its footing. I do believe that Tesla, by possibly the end of the year, probably will be over $500 a share. So I'm going to be trading it up and down. I'm going to be buying it when it pulls back to the 21-day moving average, and then I'm going to be letting it rise and then selling the call into that, and then hopefully getting called and doing it and wash and rinse and repeating it, doing over and over again. We also have some the only downside here is Sorrento Therapeutics. I do think that this does have good potential based on the options action that I've seen in this, and I do have 100 shares that I've sold an option. Now, in the small portfolio, though, I don't have an option on that, and it fell below the 7% margin that I give on everything. So unfortunately, I got stopped out of this one in the small portfolio. I'll show you that in just a second. Fastly is a position I put on today. When this was taken, it was up about $5.20, or about 5.5%. So quite good when it comes to that kind of thing. So let's go to some of the let's see if I can get this going there. Oh, goodness gracious. I'm trying to see it. All right. All right, so let's go over to Google Chrome, and oops, there we go. Go over to start to take some of questions. All right, so let's see, what's our first questions here? All right, what do you think of TSM? Thanks for Mr. Sid. Appreciate it. What's the buy point on this? This is Taiwan Semi. This is a stock that I do have in the small portfolio, TSM. So let's take a quick round at that. Where is the buy point on this one? Well, I do have a buy point. Oh, what do you know? The buy point on Taiwan Semi is 84. So we're right below that. We're just slightly below that buy point at 84 on a flat base. This is a third stage base, so it's not the greatest base, but it's not bad. 84 is the pivot on this one. We're at 82.29. You could possibly buy it at this point. It's a little bit low to buy it. I want to see a little bit more convincing movement above the I want to see a little bit more convincing movement above the above the buy point. So let's take a look at the chart so we can see that. Definitely it's right here. It's very close to the buy zone, but it's basically crawling right up this 40-day moving average. So, and it's right on the 21-day. So this is very bullish. So let's look at the criteria for buying this. Let's make sure that we're looking at the right thing here. Well, guess what? We've got 100% in the criteria. This is the William O'Neill criteria that I use, and it is an excellent criteria for buying growth stocks. So this is 100%. This was 100% in that. So I think that if you bought it at about 84, I think you're probably going to do fairly well into the year. Now, there is one thing I kind of want to show you that may be problematic, and that is that the earnings are going to be out that are due in 14 days. So typically, when you buy a stock close to earnings, it's not a bad idea to consider selling it right before earnings and then possibly buying it back. And why do I say that? Well, because earnings typically can sometimes affect the stock's price. So even though everything's going well, they've reported tremendous earnings, and I think they're going to do that, by the way. You may see a little bit of a pullback after earnings because, as they say, buy on rumors, sell on news. So that's just the only caveat I have. But very strong. The buy point I'm seeing, at least, is about an 84. So hopefully that will give you that will give you something that's worth seeing. So let's see. I guess I can't. Well, I thought I would have this. I thought I was going to have the screen mirroring up, but I guess that's not working today. Ouch! I thought I would see that work. So let's see if I can turn that on really quick. Well, I guess I can't because we're blocked out. But so I can't. Actually, what I was trying to do is run the comments from everybody on TikTok. But we'll just do it the old-fashioned way, and I'll just read them off as we see, because I'm going to get the screen mirroring working eventually, but right now it doesn't seem to be working for me. So heck. Okay. Let's see. OSTK. Let's look at OSTK really quickly to see if I have, see what we can look on OSTK as a stock. So there we go. Let's go back to OSTK. Wait. All right. So, all right. OSTK. There we go. Overstock.com. Great stock. Great company. Overstock.com. Let's see if we got anything interesting on Overstock. Well, here's the issue with Overstock. It's got a 99 rating. That's excellent. We're sticking right to the 40-day line, 50-day line. Excuse me. I had a little brain freeze there. 50-day line. So that's good. It's pulled right back up to that. That's the programming trade again here. It's definitely probably buyable at this level. Now, I would probably prefer to buy this if it made a new high at about 88.64. It's 83 right now with a 99 relative strength. So very strong. It's got 7 out of the 9 criteria for buying. So that's very, very good. The buy point on this one, I would buy it right if it moved above as it moves above the 50-day line, and that's about 83.91. So we are just almost right on what we consider a secondary buy point on this one. So thank you very much for that. That's a good call. Interesting stock and potentially very, very nice potential gain on that. It looks like a very good one. Overstock.com. TUP. Let's look at TUP and see if we can get kind of an idea on TUP. There we go. So TUP. Oops, it will not recognize. Well, it helps if I type it right. There we go. Tupperware. Wow, I haven't seen Tupperware in a long time. I'm old enough to remember, and I'm ancient, I guess, so I have to say this. I remember when they had Tupperware parties. Can you believe that? And it's got a rating of 99. I can't figure out what's going on, but something's going on and something's good going on. Let's look at the. I can't recommend this one, even though it does have a 99 relative strength, because it doesn't meet all the criteria. But I think this is definitely a watch list. There is a earnings call in 27 days. So I would be careful on this one. It does have a downward trending chart, but it does have a very high relative strength. So this is a tough one to figure out. We do have decreasing fund ownership, though, and this is something I want to point out that I don't particularly like. So I can't recommend this one, unfortunately. Tupperware. Overstock, yes. Tupperware, not so much, unfortunately. But put it on that watch list. This one might be good. We just have to see. We just have to see what is happening. Why are you not in Apple? Well, the reason I'm not in Apple is because I was stopped out of Apple. I had a stop on Apple. It violated that and I sold out. Now, I probably will be going back into Apple because I do think that we're going to see some nice action if we stay in this uptrend. So, I probably will be allocating at least one full position to Apple because I do like the stock so much. So basically, it's pulled right above the 50-day. That's good. Let's look at the Bryan here. It's not as good as I would like it. Only 5 out of 9 instead of 6 or better. So that's a little bit concerning. There's not really a buy point. The buy point is really the secondary buy point, which is on the 50-day line, and that is right about 112. So we're at 116. So we're definitely in a place that you could buy this. You could buy the stock. I just wouldn't be. I think that we're going to see some of the funds move out of the stock just because there's just so much in it. So let's look at the number of funds that are in this. I just want to kind of look at the owners of this. We have some, the Contra Fund has got 3% of this. So this is excellent. And by the way, this is the largest holding right now of Berkshire Hathaway is in this. So very, very strong. There's a lot of funds. There's 5566 as of June. There's 5566 funds in this. So almost everybody's in this one. It's interesting because there is a lot of even insurance companies. That's Berkshire Hathaway right there. That's 6%. That's Berkshire Hathaway actually. And then the banks actually own this. So wow. I'm a little bit, I kind of want to see a little bit better. I kind of like to see it consolidate a little bit more before I bought it. But I do think that it's going to move up and it's going to continue on this path. What I'm trying to show you here is that there is a potential path upwards. And as you can see, there we go. Yeah, there. Okay, so like that. And then also from here. So this is sort of the channel that I'm looking for it to move in. And I do think that, we may have by the end of the year, we potentially could be as high as 140, 150 on this, but that's the channel that I see for Apple. But currently I am not in it. You are right. I'm just kind of waiting for the opportune time. Today I went into FSLY just because there was a very, very bullish flag on it. It's called a high tight flag, which is a very good chart pattern. And that's one I did try to exploit on that. So that's what I did. That's what I did on that one. Okay, so let's look at some other from TikTok. Thank you for watching me on TikTok. What do you think about a dead cat bounce for Nicola? Well, Nicola is just, oh goodness. I wish I could recommend something on Nicola. I know that everybody out there, if you've seen any of my last shows, I was very skeptical on Nicola, and boy, did I have a good reason to be. I don't think so. I just, if you're in this one, bail on this puppy. This is not going to end well. This is just not going to end well. This is sort of like your mini Enron, and the funny thing is, and I shouldn't laugh because it's not funny, but there's a lot of people who is involved here, but Mary Barra over at GM, what a fool. I mean, buying this thing was, I don't know. Anyways, no dead cat bounce on this one. Dead cat dead, I think is on this one. They are losing people right and left. The lawyers are salivating. It's going to be lawsuit central. No, just don't even, there's better places to spend your money. Scrape the dog poo off your shoe is what I would say with Tesla. Sorry. Your small position says market still in the correction. You are right. Oh, thank you very, very much. You're right. You are so correct. Let me go and change that. Ouch. Yes. Market is a confirmed uptrend. And I forgot to do that. I forgot to change that. Ah, goodness. So I am just gonna to change that. Wow, Kazowie. Let's see if I can put the right image in there. Ouch. Wowee, wowee. So let's see if I can. Well, I can't really do that right now, but I changed it. Thank you for showing that for me. By the way, just so you can see what's in the small portfolio, I did change that. Market is in a confirmed uptrend. So that is thank you for that. I'm sorry I hadn't changed that out, and I need to do. So let's change that to a good color, which is green, because we like green. Green is the money color. So it's, oh, wait a minute, possible rebound. Let's just, it's let's just get rid of that. It's in a confirmed uptrend. I'll put the little arrow in later, but this is my portfolio. This is how the small portfolio is trading, mostly in cash, waiting to redeploy it. I did, unfortunately, I got stopped out of Sorrento Therapeutics, which is kind of sad because I do think it's coming back. It's just a very volatile stock, but I do like it, and I am in it. I'm, of course, in Tesla. I'm in Taiwan Semi and Oracle. So I'm a little bit down on Taiwan Semi. I'm just kind of waiting. I still have faith in Taiwan Semi. I think that, it's going to move higher. Definitely Tesla. My old friend Tesla. It just seems you buy it on the pullback, and it just moves higher. So this has always been good. And of course, Oracle is kind of inching up there. Not as much as I'd like. It's only up 84 cents. The buy point, it just stuck right at that buy point. 60.50 is the buy point on Tesla. So thank you for putting that out there. Sorry about that. I usually update everything, but I didn't get that today. So thoughts on Snap? Snap. All right, well, let's look at Snap, S-N-A-P, and see if I can give you something good. Snapchat. Wow, it's in a buy zone. That is killer. Let's look. Nice call there. I really like that. And what I'm going to do is let's look at the volume too. Okay, well, we have a nice cup here. Wow, this is excellent formation, by the way. By the way, everybody, this is what we're looking for on the weekly chart. So when you look to enter a stock, look to the weekly chart. Now, you don't necessarily have to use MarketSmith like I'm using. You can use, there's a lot of other good ones out there, but always go first to this weekly chart. And then when you see this cupping action here, where it's gone up high and then it's kind of come down below, and the 50-day moving average is creeping up. This is all really bullish, and you'll notice it's right at the 21-day. You can't really see it here, but this is the thing called the 21-day exponential, and it's a little green line on my chart, and it's just right hugging that, and the reason is programmatic trading. But 26.75, wow, it is right in, it's right above actually the pivot. And so the pivot on this is 26. This is 26.75. It's absolutely buyable at this point. As we move into a stronger market, which we're doing, I think this one might be very nice because it's making a higher high, as you can see. You see, that's very bullish because it's making a higher high. So let's look at the daily chart to see kind of how it works. Wow, look at that. Okay. Very nice. Very, very nice call. We are in a very good situation for Snap. Thank you for that. I'm going to put the buy point out right to everybody out there, but the buy point on Snap, S-N-A-P, is equal to, and I'm just going to give you the exact number, 26. And I was estimating it. I didn't quite have it right. It's let's see. It's 26. 26.76. Great. Wow, that is a good opportunity, everybody. That's a great opportunity for the buy point on Snap. Very nice chart. Let's look at the other criteria, just so I don't get too excited here. But the checklist, it's good. It definitely meets my minimum, 6 out of 9 on the O'Neill checklist. That's very good. Let's look at the option activity. Well, the auction activity are very, it's good. It's good. Let's look at the industry and sector. I like the industry. It's 22 out of 179. Excellent. I definitely like to trade in the top 5% of the market. So, or 10% or maybe 15%. So I'm always looking to see there's 192 different sectors of the market. I like to be in the top, at least in the top quarter and in the top quartile, but Also, if you can be in the top 10%, that's really great because it's 80-20 rule. Most of your winners in a market that's going up are going to be in the top 20% of the market. That's Pareto's law. So this is a very, very good idea. SNAP, S-N-A-P. Thank you very much for that. That's a very good buy right now. And coming into a stronger market, I think you could do quite well on that. So very good, very good call there. Really like it. Hey, thanks for watching me from Madrid. I love the fact that I can actually get me on the air if there. That's just amazing to me how that works. Let's look at NEO. Okay, well, NEO's a tough one because these Chinese stocks. NEO is definitely the Chinese Tesla. There's another one called BYD, Build Your Dreams, that Warren Buffett owns a lot of. But this is a funny stock. It seems like you can't sort of keep this one down. It's trading at 21 right now. Let's look at the chart of NEO. Let's see if there's any buy points on it. The last real buy point here was about 1545 on a first stage cup with handle, which is a very good one. There was a breakaway gap too, that's where it pushed up here. So there is a consolidation. This is sort of a high tight flag. It's not quite. So, this one might, we might be getting to a point where we could actually buy this. It's good if there is a buy on this, it's going to be right about this level. Now, I like the fact that 21% of this is owned by funds. Typically, we want to see a minimum of 20% fund ownership before it starts its real rise. Typically, with growth stocks, you have, initially there's not very many funds that are involved. You kind of don't want to be the pioneer. Okay, you want to be what they call the early adopter, and if you get to 20% funds, you're sort of at the early adopter stage. So we're definitely there. We're right at the beginning, it looks like, on this NEO. So let's look at the checklist. The checklist is excellent. 8 out of 9 on the O'Neill criteria. Super great for a buy right now. Okay, let's look at the ownership. Well, there's increasing fund ownership. We in June, we had 330 funds which are in this, which is a lot for a Chinese company, to be honest with you. Typically, Chinese companies have a lot of trouble getting this fund sponsorship. So another one, we may be doing well with NEO in the future. So I'm actually fairly bullish based on the technicals on this stock, which is kind of amazing because normally I don't like Chinese stocks that much. But this one, I don't know, maybe. I was in it before. I may be buying it for the small portfolio. Are you seeing a couple handle on FSLY monthly chart, or am I imagining things? Well, no, I'm not seeing a cup and handle on the FSLY chart. I'm seeing what they call a high tight flag. It's actually a cup, and it is on the weekly chart. So I always want to look at the weekly chart. So let's kind of look at that. Just bring that up so that you can see it on the screen. Thanks for the question. It's a good question too. There it is. This is the flag. It's a cupping and then with a flag. So this is what they call a high tight flag because it's high and it's relatively tight. So this is a high tight flag. So it's not really a cup with handle. It's a high tight flag. That's essentially a little bit different. This is a breakout pattern, and off of what they call this is a typical IPO base. It starts here, it moves down, and then it cups, and then it moves right up above the neckline. That's what they call the neckline, and then right up. It's also got a 99 relative strength. So this is why I like at these levels. This is why I like this chart pattern for FSLY. So thank you for the question. That's a good question. Really appreciate it. So let's look at let's see. Okay, dead cat bounce on Nicola. Thoughts on Penn National? This came from the TikTok audience. And by the way, if you're interested and you're looking on TikTok right now, you're just seeing a green screen. I'm trying to get the comments to come up with screen mirroring. I'm having, I'm learning technically, so so hopefully I will get this done. But right now I am broadcasting live on YouTube, and on YouTube we have on YouTube we have the all the charts and everything like that that I'm going to show as well. So if you want to kind of see them, or afterwards, about 30 minutes, it gets archived to YouTube. But right now we're on YouTube at youtube.com/DallasTradingFort, and this is episode number 143, just so that you can search it, because sometimes stuff with YouTube. So let's look at Penn National. This is a stock. This is another stock that is just terrific, because gaming is a big deal, and also with DraftKings. These are sort of the pair that you want to be looking at: Penn National and DraftKings. The thing I like about Penn National a little bit more than DraftKings is that Penn National actually has sports gambling physical locations. So I really like that as well with Penn National. It's been moving very nicely. It's up $4 today. Wow. 99 relative strength. Is it viable at this level? Wow. I think it is, but it's viable basically at the now this is not a ideal base, because the double bottom pattern, which is the base for this, the pivot was at 37.43, and that's a long time ago on this. So 37.43 is that's when this rise started. So what you've got to understand, if you do buy Penn at this level, it doesn't have as much support as it needs to be, because the pivot is back down there at about 37. So, but it is moving up the 21-day line. I think this is probably going to go higher. Let's look at the funds that are in this. Wow, 525 funds. Excellent fund ownership. There's also some mutual funds in this, so this looking strong. 66% funds, and then so this is a very, very good checklist. Let's look at the checklist. 6 out of 9, that's the minimum, so that's great. Let's look at the industry and sector. Wow, it's 4 out of 197, so that's great too. Wow, typically you shouldn't necessarily, this is not really the greatest base to buy off of, but with all these things, looking at this chart, in a confirmed uptrend, now we have to be in a confirmed uptrend, which we're in, and we're at the beginning of, I think, another confirmed uptrend. I think this could be a very profitable stock for you. Now, will it where will it go? I don't know, but based on kind of the channels here, we're looking at a very, very, very steep ascent. So, by the end of December, this could easily be over $110 easily. So just my, that's based on, what I'm seeing. I'm trying to just look at kind of what the channel would be. Very strong channel. So yeah, I really like it. I really like I really like Penn National, and it's 60. Now there's one issue here that I don't like. 66% is already owned by funds, but we're still within the range. We don't, over about 70%, it's tough for the retail investor. We want to be in it basically when 20% funds up to about 70%, but this still could move higher. By the way, a stock doesn't necessarily move higher with retail investors. It moves higher with fund ownership, and Penn National is definitely getting the love from the funds. So that's why I like this one. It checks all the boxes, and it definitely should be on your watch list. And you might want to consider a half position, or maybe even a full position. I may put this one in the small portfolio and replace some of the semis that I've been wanting to diversify away from the semis and some of the software stocks. Nothing because I don't like them. I just want a little bit more diversity in my portfolio. So, but great, great comment there. Does CanSlim require a stock to have profitability, or is it Fox and annual growth? Very good question. Now, this is the fundamental discussion that you have in the stock market. You say, well, because if you go to graduate school and go to the MBA school, which I did, they focus on that on getting that fundamental analysis. Is the SWOT analysis, all of that, and that's a great thing, but that is today. Technical analysis is what is tomorrow. Technical analysis is an analysis of how the stock is performing in the market, not necessarily how it's performing in terms of profitability. So in the last 20 years, most of the great stock pickers have all been primarily technical, believe it or not. The fundamental investors like Warren Buffett, now he's done very well too, have stumbled on some very good things regarding some of the stocks. What bailed him out basically 2 years ago was finally he famously didn't invest in technology companies. Famously, 2 years ago he started investing in Apple, and that's basically made his day, because a lot of the stocks that he invested in, like Delta Airlines, have been horrible. So I am a technical investor, and CanSlim is mostly technical, but it does take into account fundamental analysis. Now, that said, you could make a lot of money on a stock that has no earnings or has negative earnings. You say, wow, how can that be? How can that be? That just sounds so wrong. Well, the reason you can is because the stock market is a forward-looking indicator. Remember, Amazon, which is now one of the biggest and baddest stocks out there, was unprofitable for years, and people still bought it. Why? Because they saw the potential of what was going to happen. So the CanSlim, it marries both of these approaches: the technical approach, which is chart reading, and what I'm mostly concerned, which I mostly am trying to put out there on this show, and the and some of the fundamental analysis. Now, that's one of the reasons why I'm always looking to see kind of where is this stock, what sector is it in. I like to buy in the top 20% of the sectors. There's 197 sectors. I typically like to concentrate in the top 20% of that. Why? Because that's Pareto's law. Pareto's law says that 80% of the gains come from 20% or less of the stocks. Isn't that interesting? So that's why I want to concentrate my buying in the areas that are growing the fastest. Okay, so that's a kind of a fundamental analysis there. So I'm not totally technical, but I do use a lot of technical indicators. That's a very good question. And by the way, if you're interested in learning more about what I'm talking about here with technical analysis and just basically how to learn how to trade, how I learned how to trade, you might want to consider going to my website, www.tradingfloor, and then there's a tab on that. It's the Learn to Trade bookshelf, and right over here, there's How to Trade Stocks, a winning system, good times or bad. This is by William O'Neill, and I do believe that this is the best book to get started with. And I would appreciate it if you bought it off my website, of course, but you don't have to. You can go to Half Price Books, or even, there's a lot of people that have this book, but you definitely should take a look at this, read this book. It will, I read this book about 20 years ago. It was the first edition then. Now I think it's the fourth edition. It is a great book, and it will help you trade profitably. So just wanted to put that out there. And thank you so very, very much for the question. But I am a CanSlim investor, and a lot of the top traders like David Ryan, and there's some others, they're all, in the last 20 years, they've all pretty much kind of adhered to at least the framework that the CanSlim that CanSlim basically puts out there. I can't say I'm a CanSlim expert like people like Mike Webster or people like that, but I'm definitely, I've definitely studied, I'm definitely a student of it, and I think it's worth your time to take a look as well. So, just a good idea. Any thoughts about Blink charging? Well, Blink charging, as you know, I was in Blink charging before the earnings. This was the last quarter. I may be going back into Blink charging now that now that we're seeing some nice movement in now that we're out of this now that we're in a confirmed uptrend, because you want to be in the stock in a confirmed uptrend. It's a little bit thin, but I think it's not a bad stock. Here we go. Here's the chart. And by the way, you say, well, you look at yourself and you go, why would I want to buy a stock when it's at its nearest high? Well, you know what, William O'Neill, this is almost, I guess this is about almost 50 or 60 years ago, figured out that back in the day, this is the early 60s, that there was a thing called the Dreyfus Fund, and you could look this up. Actually, Julia Louis-Dreyfus was the daughter of Jack Dreyfus, who had this fund, and it was the most successful hedge fund and most of hedge fund mutual fund in the world. And William O'Neill, who was a stockbroker, wanted to figure out, well, why is this so successful? Well, he started charting the buys of this fund, and he found out that Jack Dreyfus was buying growth stocks that had no earnings at or near their highs, within 15% of that. And that was just not done in those days. Everyone was a value investor then, but he found that, this Dreyfus fund it was better than all the other ones. Well, long story short, what I'm trying to tell you is that, with blink charging, and I know I'm going off on a tangent here and I don't want to do it, but blink charging is at its high, and that's actually a very good time to buy it. So let's look at kind of where it's at. Now, it's gone sort of from the low cost penny stock range into something that's a little bit better. So look, here you go. You're like, well, why would I buy something like that? Why? Well, part of the reason is, and why would I buy with a checklist? Well, the checklist is pretty good. It's 6 out of 9. That's my minimum. There are increasing fund ownerships, not very many. This is a very thinly traded stock. It's not a very big company. So, but it looks like it's fairly good. And there actually are options on this which are paying fairly good. So the December 20th option, 1250 options, paying 119. That's pretty good, actually. So that means that there's actually some interest in this. And it does look like it is you could potentially buy it. Now, I would definitely want to see it move, right? And it's moving, basically the place to buy this is at the pullback to the 50-day line. That's about 864 right now. Now, it's 1067. So I do believe that we're going to see a little bit of a pullback. If this thing pulls back, it might be a buy again. I would like to buy it at about 850, 864. That's where I'd like to buy this one. But I do like the stock. I do like Blink Charging. I'm not in it currently, but I'm waiting probably for a pullback on Blink to buy it once again. Also, let's see how we are doing with earnings. Yeah, we have a little bit of time on earnings. That's good. With stocks like this, we want to sell them before earnings because they almost always will pull back in earnings. So just FYI, if you do decide to go into Blink, and I think it might work very well as well. Okay, so let's look here. What are your thoughts about MAXR and KR? Thanks. Well, let's look at KR first. That's Kroger, of course. Everybody likes Kroger. Oh, yeah, Kroger. I shop at Kroger, by the way, full disclosure. Kroger is about the safest stock that you could have in the pandemic because everyone's got to eat, right? So I eat too much, but everyone's got to eat. There is a buy point on a flat base. It's at 34.50. It's right now at 32. So it's just below the buy point. Now, this is going to be a much more conservative stock. This is going to move up slowly. This isn't probably going to be, a rocket ship like Fastly or anything like that, or like Tesla. But for slow, conservative growth, this one might be a good one. A lot of funds are in it. It's gotten increasing fund ownership. 2,067 funds were in this as of June 30. So that's pretty good. Let's look at the checklist. It's got a strong checklist, 6 out of 9. That's definitely what we want to see. The fund ownership is increasing. We do like that. 2,067 again at the end of June, which is good. That's very good. The industry and sector. This is the one problem this is one thing I don't like about. This is what I was talking about, Pareto's Law. I typically like to buy stocks that are in industry sectors that are in the top 20% in terms of performance. Unfortunately, I cannot say that with Kroger. Kroger is its industry rank in terms of the sector that it's in is 143 out of 197. So it isn't in the top sector. So I probably would pass on this one. It's a good stock. It's a good it's a good stock, but I would pass on it just because there's not as much profit potential in it. Now, I don't think you're going to lose your money on it, but there's not as much profit potential in this one just because of where it's in the sectors. I think it needs to be I like to be in the top 20%. So I want to be in I want to be maybe number one sector down to maybe about 40. And that's about it. I don't want to go too much lower than that because we're not going to see probably as much growth in companies that are lower than that. So let's look at Maxar Technologies. This is interesting. So Westminster, Colorado. Okay. Well, I don't know. The 97 relative strength. This is good. Okay. Interesting. Interesting company. This looks like a government contractor. Provides operational solutions to commercial and government organizations across this narrative. Okay. EBITDA. Okay, so this is really a Beltway bandit, as we call them, aerospace defense. All right. I'm not really familiar with this company, but it looks like it's marching right up that 21-day line. So that's not bad. I don't like the fact, though, that it's in the industry rank as 150. I'm not particularly into that. It's 6 out of 9, so that's okay. This is a watch list at best. This is okay. This is a so-so stock. Let's look at another company that may be better than this in the government contractor space, and that's Khaki International. And let's see. Yeah, it's still bad. Khaki. I used to work for this company years ago. Well, yeah, not a good look on either, I'm afraid. I can't recommend. Kroger is definitely at a buy point, good stock. Not going to make a lot of money on it though. And the Maxar, another thing, it's just not a good sector to be in right now. So I wouldn't recommend it. I just wouldn't recommend it. Let me see if we can get somebody from TikTok here. Nicola, what do you think? I think sell. That's what I think about Nicola. Sell it while it has some value, because in a few months it may have zero value. So you just kind of want to get rid of that. Scrape that dog dew off your shoe. That's what I would say with Nicola. I just think that it's a mini Enron, and you're going to just be screwed if you stay with that stock. So just my take on it. Tesla, the gift that keeps on giving. I do like Tesla. I am a Tesla bull. So yeah, it's showing nice movement. It's kind of hard to see on this stock. So let's look at the daily chart, which you really have to do for Tesla because it just moves so quickly that the weekly chart sort of is. Normally you start with a weekly chart, but with Tesla you start with the daily chart because it's just so volatile. It's staying nicely above this 21-day exponential. It's right on the 10-day. It's moved above the 10-day. Very bullish. The next resistance is about 461. If it moves behind 461, it's probably going to go above 500 by the end of the year. So that is Tesla, and I'd probably be trading it as well. And I have Tesla, by the way. So for everyone out there. Okay, thoughts about AMD. Boy, AMD. This is one. I keep telling everyone. I've tried to enter AMD multiple times. I never have seemed to time AMD right, but this is a terrific stock. My trading of it is not so terrific. So, but AMD, great stock, and look at it. It's just moving nicely. So this is probably going to do well into the close of the year. Who knows? I mean, but it's pretty bullish. This pattern is pretty bullish. This is a cupping pattern. Let's see if I can get a weekly chart to see if we can see anything. Yeah, it's just sticking right to the 50-day moving average, and it's pulled right above it. That's bullish. Let's look at it passes on. It's 100% on Bryan criteria. That's excellent. It's got increasing fund ownership. Excellent. And let's look at the options action on it right now. The 85 October 20 call is selling for, well, this is good. So if you could make money right now, today, right as we speak, by just buying 100 shares and selling. This is what I do a lot, selling the October 20 call, the 85 call for 242. That would net you some fairly good swag. Definitely like it. 99 relative strength. my concern was the 50-day line. It's moved above that. That's strong. It's probably going to pull back a little bit, but I think it's probably going to go higher. I think it's probably going to, hopefully it's going to push up at least to 93.64 and possibly beyond that. So really good stock. Again, just, and again, one of the things I like about AMD, of course, is that it's in an excellent sector. And this is what I was talking about, why, it's Pareto's law. Why try to, it's easier to find good stocks in excellent sectors than it is to find good stocks in bad sectors. This is a very good sector. Its industry rank is 30. That's excellent. We want to be from about 1 to 40. It's definitely in there. It's got a very high earnings per share ratio rating. It's strong, and checklist is 100%. So I can't really say much bad about AMD. This probably should at least be on your watch list and possibly in your portfolio. So if you want a chip stock, this is one of the best ones. Of course, NVIDIA is probably the best one right now. So, but it's much more expensive, of course. All right. What is the buy point for FSLY? Well, thank you for looking at my trade alerts. I did go into FSLY today. We'll see. Hopefully that is a good move. It might, hopefully it is. I believe it's buyable right at the 20 right at the 50-day, and it's a little bit beyond that. So, I'm being a little bit aggressive here. I think that the buy point on this really is about 95. I really believe that. It's pulled back a little bit from where it went today. It's up $6.39. I think we've just closed. So yeah, it's up very nicely today. I think it may pull back a little bit tomorrow, but I definitely think if this thing falls back to 95, I think you want to be in it because it looks like it's going to go higher. It looks like it has the potential in the short term to trade up to about 120. That's kind of where I'm looking at it. In the short term, and I'm looking, short term meaning of the next 2 or 3 months, is I think it will trade up, probably to about 120, based on the chart that I am seeing here. So, and of course, it's all an educated guess. Nobody can predict the future, but I do think it's good. That's just the way it is. Okay, so, thoughts on Upwork, UPWK. Kind of a cool concept Upwork is, people can. The only thing is, I just don't know, I don't know how it's great for employers. I'm not so sure it's great for employees of Upwork, because there's a lot of talented people that, might get screwed, with something like that because it's the internet, but it's pulled right above its pivot. Its pivot was 1759. And it's at 1865.69. So this looks like, now here's I do have an issue with this. I kind of want to see it retake the 24. I want to see it if it's near its tie. But let's look at the Bryan criteria just to see if it's very good. 6 out of 9. This is my minimum on the O'Neill criteria. It's got 6 out of 9. It's a little bit. Sales and earnings per share are not as good as I'd like to see it, but let's see if we have definitely fund ownership that's moving up. That's good. Industry and sector. Well, this is a problem. Unfortunately, I don't like the fact that it's in the wrong industry sector, 197. This is a watch list stock. This is not an immediate buy. Unfortunately, it's a good company. But this is not an immediate buy. This is a watch list based on some of those things where I like to be. I want to see a better industry sector, and I want to see it basically move about above 24. But this, I probably will put this one on the the small portfolio watch list because this does have potential some real potential. But right now, I don't want to buy it just based on that. Okay. Thoughts on KURA? Stock has been hitting new 52-week highs regularly since late May Do you buy a new high or wait for the pullback? Good question. I like the way you're thinking about this. Most, a lot of, well, of course it's June. I didn't look to see who it was. Obviously, you're going to know this. Buying on a new high is a very good strategy, by the way. You buying a quality stock in a quality sector on a new high. If you just do those things, it's a good deal. You're probably going to do well. So let's look at Cura Oncology. Okay, let's look at. You have some interesting calls. I like some of your stocks. Okay, let's look at the weekly chart. There's the only consolidated base is at 1916, so that's okay. It seems to be pretty reliable. Let's look at the funds. We've got nice fund sponsorship. I like that. 6 out of 9, excellent, good. That's the minimum that I like to see. Industry rank is 71. That's a little bit low. I like to be in the top 40, but still not that bad. Wow, medical services. What can I say about this one? This one is, this one looks like, I wouldn't. Well, it's moving right up. It's moving exactly up the 21-day. Now, the reason this is hugging the 21-day so convincingly, and the reason why is because it's owned 78% by funds, so they are programmatically trading it right to this line. So this is a very good thing. This probably, based on this, is likely to move higher as long as the market is moving higher. Now that's the main thing. Is the market moving higher? Come on, baby. There we go. Just trying to put my. See, this is basically the angle that's moving at. It's moving right up the 21-day between the 50-day and the 21-day exponential is where it's moving. So I mean, if this doesn't break trend, it always breaks trend, by the way. If we don't have a trend break on this one, we should be going up. But there's several things I don't like about this. Low volume. I would watch list this one. I just don't know if there's going to. I don't know if I could go in. I don't know if I could do a buy on this one, but I would definitely watch list it to see how it performs over a period of time. So that's my. If you did buy that, you would buy it on a pullback to the 50-day line. That's basically the only way you could buy it that I can see. So, Twilio, TTW. Okay, let's look at TTWO. We got there. Take-Two Interactive. I'm sorry, I said Twilio, and I don't know why I had that in my mind, but Take-Two Interactive is great. It's one of the biggest game publishers in the world. Very strong. 166.11 is currently where it's at. It's below the 50-day moving average. I'd like to see this thing move above the 50-day, but it definitely, there is a consolidation base. Now, here's the thing. This is going to be a range runner, basically between the ceiling on this is 180, and the floor on it is 180, and the ceiling and the resistance. Okay, but give me the resistance. There we go. Here's the resistance. The resistance is 179, and the support is 150, and it's moving up the 50-day line. So I would say that it's very likely to go higher, but I want to look in, and this should be their best season coming into Christmas. So let's look at the checklist. It's 100%. Wow. Okay, this is convincing me. It's 59% funds. Wow. It's got 2% banks. Wow. Wow. Yeah, this is probably a buy. Just looking at it, it's a little bit low on the rank, 88, but I'll take it out of 197. So TTWO. TTWO. This is definitely least. Yeah, this is definitely a watch list. Where would you buy this? Okay, let's see where we could buy Take Two. I think it's buyable at the pullback, basically to the 50-day line. The 50-day line is 164. You could buy this right now at 164. Good call. Very good call. I have that down on my kind of my to research list and possibly put out on the trade alerts. By the way, if everybody is interested in the trade alerts, super easy. All you have to do is go to www.Dallas Trading Floor and then sign up for the trade alerts. I will show you that on the homepage of the website and where to go. And that's right here on Dallas Trading Floor. This is what the website looks like. There is a subscribe to free trade alerts here. First and last name and email address is all free. And I send out trade alerts, and I'm probably going to be sending out some this weekend on various stocks now that we've moved into a confirmed uptrend. So very exciting on that. And if you're looking on TikTok, super easy to get that same thing. Just go to the profile, my profile, hit the link. You'll be taken directly to the sign up page for the action trade alerts. And thanks again for watching. I'll be on tomorrow at 2:30. Thanks again. Happy trading, and stay safe. We're moving into a confirmed uptrend. This is very exciting. So, there's a good chance to start making some more money, and I will be with you every step of the way. Thanks again for